So end of the year, I think we're going to be between $70,000 to $100,000 on the price of Bitcoin in 2024. My, long-term sort of this cycle all-time high, anywhere between, I think it's going to be somewhere close to $1 million US for one Bitcoin on the upside. The bull market is still going to continue. Obviously, we've slowed down a bit, and now we're entering the summer, the northern hemispheric summer, where things slow down, volatility declines, and we're going to get a choppy range-bound market. But for those people who have fiat and extra cash that want to allocate to crypto, this is the perfect opportunity to do so. I think that our expectations need to realign with the fact that there's going to be even more money printed by the major economic blocks between now and the next bear market.
Arthur Hayes begins by discussing the historical patterns of Bitcoin's price movements, particularly the 4-year cycle. He points out that, based on past halvings, Bitcoin tends to reach new all-time highs between 4 to 18 months after these events. However, Hayes emphasizes that the current cycle is different due to significant macroeconomic and geopolitical changes. Hayes discusses the broader geopolitical landscape, noting that we are in the midst of a significant shift in the world order. Major powers are trying to maintain their influence by printing unprecedented amounts of money, which he believes will inevitably lead to more economic instability. Despite these efforts, Hayes is optimistic about Bitcoin's role as a hedge against this instability, predicting that Bitcoin could reach between $70,000 and $100,000 by the end of 2024, and potentially close to $1 million in the longer term. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
So, you can look at the previous halvings, and anywhere between 4 to 18 months later, you get a new all-time high. The more important thing is that the major economies around the world are going to print even more money between now and, say, the next 18 to 24 months. I think the big event that crypto investors need to follow very closely is the upcoming U.S. presidential election. Not because the U.S. is important just because it's the U.S., but more so it's the global empire, its financial policy influences what the Chinese, the Japanese, the Europeans all do. And so if you have an easing of monetary policy because Janet Yellen, U.S. Treasury Secretary, and Jerome Powell, the Fed president, are doing everything they can to make sure that Joe Biden gets reelected. And that basically means, how do I reduce the cost of government borrowing so that him and his Democratic Party can hand out more goodies to the electorate and get reelected? That's what's going to happen between now and the end of the year. When you control the purse of the government, it's very easy to do so by printing money, borrowing it, and handing it out to people in various forms. So the difference between this cycle and all the previous ones is the geopolitical and macroeconomic situation of every other major power. And that is, we are in the midst of changing the world order. I don't know what that new world order will be, but the people who make money off of the old order don't want it to change, and therefore they're going to print more money than we've ever seen in human history to try to forestall that change. The change will still happen. They will still get swept aside by the tides of history. But in its wake, we have Bitcoin, and that allows us to escape. So end of the year, I think we're going to be between $70,000 to $100,000 on the price of Bitcoin in 2024. My, long-term sort of this cycle all-time high, anywhere between, I think it's going to be somewhere close to $1 million US for one Bitcoin on the upside. That's my prediction. I hope we get there. If we get even close, that'll be good. I go back to the first thing I said, was that the thing that got us from 2009 to 2024 in that massive central bank printing, government spending, that's going to continue. Now, the addition of the ETF is very important because now, instead of just, Muppets like us who aren't, fiduciaries or institutional investors who are buying these things, we now have an institutional investor class who are saying the same thing. You have all these luminaries of the financial services industry in the West saying the same thing that I'm saying, which is the government spending by Western democratic governments, and I'll add China in there as well, is unsustainable at these levels. And they're questioning whether or not owning a domestically risk-free domestic currency bond is a good idea for a fiduciary. Now, if that belief holds, then these institutions can now express that view through a BlackRock or Fidelity or pick your large fund managers Bitcoin ETF. They don't have to custody it. They don't have to worry about who they bought it from. They're buying it from, the establishment itself. And so they can express this negative view on the sovereign bond market directly into the best performing asset in human history over the last 15 years. So while the growth in AUM might have slowed, the marketing machine of TradFi is just getting started. These are the most successful products ever for BlackRock and Fidelity and the rest of these fund managers. Do you think they're just going to stop after 3 months? Of course not. They're going to be advertising in all the mainstream financial press. This is a long game. So I think people are underestimating the stickiness of these flows. That doesn't mean that we're entering into, a Kyle Davies and Suju super cycle. That's complete bullshit. There will be a downturn in the price of Bitcoin at some point. But I think that our expectations need to realign with the fact that there's going to be even more money printed by the major economic blocks between now and the next bear market. Whoever wins, they're campaigning on, I'm going to give you something that you don't have to pay for. And I'm going to pay for it by borrowing more money. I'm going to pay for it by using the central bank to print money. And that's really what the fight is about. The bull market is still going to continue. Obviously, we've slowed down a bit, and now we're entering the summer, the northern hemispheric summer, where things slow down, volatility declines, and we're going to get a choppy range bound market. But for those people who have fiat and extra cash that want to allocate to crypto, this is the perfect opportunity to do so. The problem with M2 is that it doesn't capture all the things that are used as credit money in the economy. And every time there's a new problem, the elites in charge come up with a new way to confuse people about how they're going to print money. So maybe it's M2, maybe it's broad banking reserves, maybe it's the reserves held at the central bank. It depends on every single economy and how they want to print money. But at the end of the day, the goal is, how do I stuff more credit money through the economy without getting a negative reaction from the populace being like, oh, what's all this inflation? I'm going to blame the people in charge. So yes, M2 is a good measure. And sometimes it works, and then sometimes it's flat. But it's been flat, for a while. But you still see gold and crypto doing very well. You still see major tech indices at all the new time highs. So there is an ample liquidity. It's increasing. It just might be in the indices that people are familiar with from how it operated in the past.
While Hayes is bullish on Bitcoin's future, he warns against unrealistic expectations of a perpetual bull market. He acknowledges that there will be downturns, and it's essential for investors to stay grounded and not get carried away by short-term gains. Hayes advises monitoring the overall money supply and geopolitical events as indicators of market shifts. Hayes also touches on other cryptocurrencies, particularly Solana. He views Solana as a high beta trading vehicle rather than a long-term competitor to Ethereum. Despite Solana's impressive user interface and community engagement, Hayes is skeptical about its ability to deliver on its high transaction throughput promises. He suggests that other Layer 1 blockchains might emerge as stronger contenders in the future.
Probably you're going to start seeing some sort of positive real rate, and I define the real rate as your 10-year government bond minus nominal GDP. Or maybe there's going to be some major global conflict and a reordering of the economic and both political situation between the major powers. That sort of will culminate in obviously some orgy of money printing. And after that, our expectations might just get ahead of us, and that probably is a signal that it's time to come down in price. Do I have a specific thing I'm looking for? No, it's more of a feeling. The fact that we just passed 70,000, now we're bound at 63 or 64,000 Bitcoin, and people are questioning whether that was the end of the bull market. And we just started. I mean, this run, it really just started in November of 2023. Well, I would say that probably means that we're not even close, because we have people inside of the ecosystem are still doubting it. When you hear everyone saying we have fundamentally changed the cycle of Bitcoin could never go down. When I start hearing more and more of that from people who are doubting it at this point in time of the cycle, then I'll start to get a bit more worried that our expectations of what money printing can do for Bitcoin are getting ahead of what will actually happen. but I don't think we're there yet. I like Solana as a trading vehicle, as a high crypto beta momentum play. So I buy Solana when I think the market's about to start pumping. I'll sell it when I think there's going to be, a downturn, and I'll just play the yo-yo as it goes on. Do I think it has a fundamental way to beat Ethereum? No, I think it's suffering from the same things that ETH suffered from in its come-up cycle, right? You had an advertised throughput when in reality, it's not there. And there's various reasons for that. I'm sure that's the Solana developers are hard at work trying to fix them. They've done a good job in creating a culture around meme coins, a good UI UX in some of their applications, but at the end of the day, was it the 10 or 20,000 or 100,000 transactions per second that was advertised to the community is complete bullshit. That doesn't mean that the chain doesn't work or that it doesn't provide value. It's just another example that you were able to bring something successful to Solana, meme coin trading, and it broke the network. Now, does that mean that it's going to go to zero? No. I do think there's a very engaged community that likes to buy and hold this thing, and therefore it's an easy trading vehicle. It's very liquid, but I don't see it long-term supplanting ETH. And I think that there are some other layer one competitors that are going to see what's happening at Solana, make some improvements, and you could see a very, very hotly contested fight for that number 2 spot behind Ethereum. I don't think Solana has a big moat here. They should be very worried. Culture is the most important thing in humanity, right? We do all this stuff, and at the end of the day, we have free time, and we do culture, sports, arts, go to nice restaurants, go to see a play, whatever it is. So when we can bring culture to the blockchain ecosystem, we can onboard the next billion people because that's what they care about. Someone is more likely to go spend a few hours in line to buy a Louis Vuitton bag than they are to learn about financial freedom and use MetaMask. And so if we're able to bring something that people actually care about intrinsically, which is digital art or some other types of culture, and we're able to trade it and experience it natively on a blockchain, then you're going to see orders of magnitude more engagement from those who otherwise wouldn't participate. An example, CryptoKitties broke Ethereum in 2017. Dog with Hat and other meme coins broke Solana in 2024. Ordinals, Runes, BRC20, these things are going to fill blocks. They're going to provide transaction fees for miners who now have just lost half their block subsidy. It's going to allay these concerns of what are we going to do when a block subsidy goes away at Bitcoin? Well, humanity's culture is going to be on-chain, and that is extremely bullish for the Bitcoin ecosystem. Maelstrom, my fund, we've invested in Oil, a Ordinals wallet, and we'll continue to make other investments in this space, as I believe this is the most important thing that we have to get right as a crypto ecosystem. If we can bring culture on-chain, then we bring the users. So I can't speak to what's best for every sort of investor, but I can tell you what I do and what we do at Maelstrom. So on one end, there is I don't want to have any sort of cryptocurrency risk, but I want to earn a return in the cryptocurrency ecosystem. And what we do in that situation is we have large synthetic dollar positions in Athena, so the USDE. This staked USDE yields anywhere, it's in the past between 10 to 60% APY, and that's because they're able to capture the basis / cash and carry yield on Ethereum versus US dollar and Bitcoin versus US dollar perpetual swaps and the Ethereum staking yield. Now, when you deploy this strategy, you don't have any price risk of Ethereum or Bitcoin. If the market goes up in crypto, that's fine. You don't make any more money. You make your 10, 15, 20%, whatever it is. It's a variable rate. It could go negative as well, right? There's definitely that risk there.
A significant portion of Hayes' discussion revolves around the integration of culture into the blockchain ecosystem. He believes that bringing cultural elements, such as digital art and entertainment, onto the blockchain will drive mass adoption. This integration is crucial for attracting a broader audience who might not be interested in financial aspects alone. Hayes cites examples like CryptoKitties and meme coins that have previously driven significant blockchain activity. Hayes shares his investment strategies, emphasizing the importance of diversification and risk management. He explains how his fund, Maelstrom, invests in various crypto assets and related technologies. Hayes highlights the potential of synthetic dollar positions in Ethereum and Bitcoin to earn returns without direct exposure to price volatility. This strategy allows for capturing yields from perpetual swaps and staking without taking on the inherent risks of holding volatile assets. Please like and subscribe my channel.